working at Phillip Securities Private Limited. So my branch is Phillip Investor Center, Raffles City Tower. Okay, today the webinar will be last for an hour. So let's kickstart the learning journey together. Okay. So here are basically the disclaimers. And for Phillip Capital, our corporate profile. So just a scan through. If let's say you all went for any webinars before, it will be all displayed and they are the same due to company compliance. So let's just scan through. So basically, we are providing a myriad of investment solutions and tools for customer to really think, for investors like yourself. And we do offer insurance solutions as well. So what is the major milestone we added in for like awards and achievement? Basically is 2024, we are the best retail broker award by SIAS, Investors Choice Awards. So this one is the newly added. Okay, so today the content will be essential steps to kickstart your investment journey checklist before you start. And of course, if let's say we are doing investment, it deals with our money, our hard-earned money. Of course, we need to understand ourselves, especially when the risk pyramid. It's more like because for market we do expecting some market cycle. So it's not only important to deal with the uptrend of the market because everyone is happy. But then how if the market is going for a downturn? What can we do? So we must able to understand ourselves what's the risk pyramid and what's the risk appetite of ourselves. And what basically today, one of the investment solution I'll be recommending, which will be the money market fund, which offered by our Phillip Capital Management. So what are the benefits of a money market fund? And how does a money market fund compare to bank deposit? An example, what if let's say an investor or maybe our Phillip customer are interested about the money market fund. So another question in mind will be, so what's the fund is about? And how is the underlying investment be like? Yeah. So later on, there will be a breakdowns on the underlying investment for this money market fund. And first foremost, here is a crossroad. So we need to define ourselves, right? Because we are dealing with the money and we hope there are capital appreciation or some of the investment solutions we are looking at. Our preset mindset about the whole investment process. So we need to identify ourselves whether we are trader or investor. So here the two words are quite tricky. They are sounds the same because they are dealing with buying or investing, right? For trader and investor. But then what's the key difference between a trader and investor? To my humble opinion, the trader actually leverage on market volatility to make certain up and downs and to spot the trend and try to make some profit within a short time. So that comes with volatility. And what about being an investor? Investor, it can really be someone looking for long term, someone is having something in his mind, I mean a strong belief for certain investment tools. And what basically investor is seeing for the future, like what will work the best, maybe not now, but maybe 5 or 10 years down the road, right? So those are the few salient point maybe we should looking at. We define ourselves a trader or investor. So after that, after you fully understand yourself, maybe we can just start the journey of investing. So essential steps to kickstart our investment. So basically, what we can say is to set clear financial goals. And basically, it's like define our investment objectives. Is it for a purpose? We are investing for a purpose or for something we have in mind, be it short term or long term. Because for the goals, it can be only short term or long term. So we also need to determine what we aim to achieve through the investments, be it short term or long term. So another quite important block of this will be the building a retirement fund, which we all are experiencing different life stage and reaching different milestones in our life, definitely. So retirement is always one of the thing that the government or maybe even the school is start educating us about how to have a better retirement life. So I mean, we need the support pillar of money or maybe some resources. Or it could be for different life stages for the working adults or maybe in the 30s or 40s for the double working parents. The purpose might be saving for the children's education. Or maybe for some of us, if let's say we are trying to invest, of course there are two main things, which one is the capital appreciation of your investment. Basically, that means today we bought something at $1, we see a capital increase, maybe the thing bought at $1 increase to $2. We see it's suitable and it's within our range of selling. Of course, we will try to transact and make the capital appreciation profit, take the profit from capital appreciation. And another strategy which will be a passive income stream, right? So basically, like we are collecting something, we are expecting something more stable, like collecting a rent, collecting a dividend. Those are called passive income stream. So it's more stable, but then the return might not be as high, right? So there's always good and bad balance of. So the third point, which will be clear and well-defined goals that will help to guide our investment decisions and tailor our portfolio to align with our maybe own aspirations or preset mind of what we believe in. Because some of us will be hardcore fans of maybe unit trust or certain asset class. And maybe somebody they think gold is good, they invested in all different kinds of investment tools, you see. So definitely, yeah, our preset mind is quite important, like what we want to be invested in or what we want to invest. So yes, set clear financial goals. So come after we setting our goals, of course we need to assess our risk tolerance. So basically it's like every investment it comes with a risk because no investment is 100% guaranteed or guaranteed. Yes, we are not supposed to use it. So here it comes with our understanding the risk tolerance, which will be shaping our investment approach. Basically, all the investment tools, if let's say you do know, later on, there will be a slides on risk pyramids. So from there, they will be describing all the different financial tools that's like categorized in different risk level, basically high, middle, and low. So for us to really think about for the better time, of course we all know we are going to benefit from the uprising of the market. But then when it comes to downturn, what's the risk tolerance level? So now you'll see the link. So understand ourselves is the best investment approach, and assess how much risk you are comfortable with, and consider factors such as age. So similarly, like for age, maybe for retiree or person that is near to retirement age, maybe 65 or 60 and above, or 55 and above. So I do see customer that is coming with, I'm looking for something stable. I don't expect too much volatility. Maybe I want a stable stream of income, or something like that. I'm not looking too much at aggressive capital appreciation, maybe 10%, 15%, but then I'm looking for a passive income stream, maybe a 5% per year. That will be good because I'm not too much thinking about capital appreciation, but then I do want to collect stream of income, stable stream of income. So of course, another part which will be financial obligation, be it youngster or later in our life stage. Of course, we do have some financial obligations. So basically, it's our commitment to life. So we need to, so when it comes to financial planning, we always need to set different pots of gold, you'll see. So some is for emergency, some is for daily expenses and everything. So some we must do the savings, and from the savings maybe we can look further for some investment. So of course we need to take in the financial obligation, and also another then come with the third component, which is our investment timeline. So this one is really associated with our age. So usually for the younger clients, they definitely have more timeline to do the invest. Yeah, so we can see the picture from here. And also for the third point, which is a diversified portfolio that must align to our risk tolerance, and then that can better navigate us through the weather market fluctuations and achieve long-term financial growth. Yeah, because here we are also at the crossroad, because I have mentioned, for being a trader and being an investor, we must be able to categorize us. So the best, if let's say we can achieve a long-term financial growth, because if let's say we go into the different charts, maybe all the index, maybe Standard & Poor 500 or Nasdaq, if you really open up the chart, or you are really zooming to the past 20 or 30 or 40 or 50 years, you are going to see you are seeing definitely an increase for all the capital that invested in all the index for US markets. So yeah, so I mean for investor, definitely that comes with a discipline. Yeah, so we are talking about long-term financial growth. Yeah, because in short term, we are experiencing the market fluctuations. That's the volatility we all cannot control for individual investor. So coming to the next. Okay, so here will be access to our risk tolerance. So what we can see is the two polar of the risk tolerance scale. One is the low risk, one is the high risk. Okay, maybe let's deep dive to all the different terms. So they are conservative, moderately conservative, moderately aggressive, and finally aggressive. So for conservative, basically I mean most of us we are. So our primary goal is to preserve capital, and even if it means missing out on potential returns. So that's why for most of my clients, I mean, fixed deposit from bank is still one of the top choices when it comes to investment, because I mean, maybe it's safe, maybe it's a guaranteed yield after a certain times, and maybe the brand, because I mean some of us we really go for the brand, like we stick to certain brand for the life, we don't easily change. So those are the conservative investor. And how about the second one, moderately conservative? So the primary goal is still to preserve principal, but willing to accept a small degree of risk or for gains. So basically a small degree, there might be small degree of risk for gains. So here is only talking about the gains. So gains associate with the risk. Every gain that will be associated to a risk. So definitely maybe the gains or losses we are looking at maybe 2 to 3%, maybe consider moderately conservative. Then how about moderate? So the primary goal is to reduce risks and enhance returns equally. So basically it might be a 5% for moderate. They are able to take a 5% risk for the whole portfolio they are invested. So how about moderately aggressive? The primary goal is long-term returns. So they are willing to accept significant risk, maybe 5 to 10% willing. So those are aggressive, right? Because what we cannot control is the market, the fluctuations. It comes with daily, hourly, or every second. So definitely those moderately aggressive investor, they are looking for long-term returns, but then is able to bear through the market fluctuation. Then how about the last but not least, aggressive? So the primary goal is to maximize the return. So they may endure extensive volatility and significant losses. So let me categorize them for more than 10% of losses for their portfolio. So what we can see from all the 5 salient point here for the risk tolerance scale, basically it really defines how much we are able to take when coming to the bad times, not only about all the flowery time. So that will be very crucial to access our risk tolerance. So here, when it comes to the educate ourselves about investment options. So as we embark for our investment journey, we must take the time of studying all the investment vehicles and strategies. If let's say we are an individual investor, we are trying to do the investment ourselves. So we have to do the homeworks to understand each and every investment vehicles and strategies. So the second point, which is the from stocks and bonds. So these are the things that is recommended, like those are the investment vehicles and strategies. So stocks, bonds, and mutual funds. Some are ETFs, and maybe even real estate, and much more options to consider. So like here, if let's say we are going to invest ourselves, definitely we are going to research and seek guidance. Either we can research ourselves or maybe seek guidance from a more experienced investment consultant, or to gain a comprehensive understanding of the different investment avenues and their potential returns and risk. So that will be making a holistic financial planning, right? Understand the tools we invested in and what are the risks we are facing. Are we able to take it? So, and understand the horizon, the investment horizon we are going to take. So that makes an investor mind. Yeah. So coming to the next, which will be create a financial plan. So developing a well-defined financial plan is essential for structuring your investment journey. So it's like using the tools. It's more like leading a troops to fight a war. So you need to know the enemy and of course your own troops, like what's your strength, what's your weakness, and how you are going to arrange. Maybe you are going to arrange more aggressive troops or some conservative one. Maybe like defense, you are focusing more on attack or on defense. So hopefully it explains. And outline your income sources, expenses, debt obligations, and investment capital to create a comprehensive financial roadmap. So this is to understand ourselves. Basically is cash flow and our uh, how to say, the health, fitness of our own finance. So finance fit. Are we finance fit? Yeah. So basically we need to know the outflow and inflow of our cash, basically to generate the cash flow of ourselves and to know how much we are comfortable to stay invested. Mm. And and the third point, identify how much we are able to invest and establish a budget that prioritizes saving and investing for the future. So like we need to save in order to invest. So this is quite healthy if let's say we are able to save day to day and if after a month from our salary. So we keep a portion, maybe invest some and try. Yeah. And also another one which is other than doing the investment yourself, which could be seek professional advice and consider enlisting the expertise of a financial advisor or investment professionals to help us to navigate the complexity of the investment landscape. So basically this one also can be many of the working adults or maybe some of us, we doesn't really have the time to go into the investment areas and to read the newspaper and to understand the markets and read the news. So many of the investors they tend to seek professional advice and ask financial advisor or investment professionals to do it on their behalf. So it really frees up that time to pursue other better things in life, maybe. And also considering a knowledgeable advisor which can provide personalized guidance and the tailored investment strategies to each of our unique circumstances and to help make informed decisions and align with our each individual's financial goals and risk tolerance. So basically it's a holistic financial planning. So must understand the risk profile, investment horizon, and the preferred investment tools. So before we do any investment, here are the checklists. Do we have at least a 6 month of emergency funds? So how can we really consider what funds are called emergency funds? So if let's say for working adults that has a full-time job, of course the emergency funds will be 6 month of the full salaries. So that's the emergency funds when it comes to the market downturn, maybe lost a job. So we need to at least type through a 6 month jobless time. And how about other age range? Those are consider your monthly expenses, like your necessities or the bills or the credit payment or maybe your own expenses. We need to have this all recorded. So times a 6 month, that will be the total emergency funds we need to keep. And the second, which will be investment horizon. We need to know how long can we stay invested. And come to third point is the risk preference. So just now the 5 points, which are moderately conservative, and all the way up to aggressive. And another thing, we should be set our budget, like how much we are comfortable for this investment. And lastly, of course, the choice is still up to us. What we want to invest in, what are our beliefs. Oh, here will be the risk pyramid, which is the from the low risk to high risk. So we might be looking at the base first, which is considered the lowest risk. So cash and cash equivalents which will be somehow like money market, and also the bank's fixed D. Those are considered somehow the lowest risk, which is cash and equivalents, and also come to notes and bills and money market bank accounts, government bonds and debt. So come to the middle stream, which is the real estate, equity mutual fund, large small cap stocks, high income bonds and debt. Of course, at the top, which is the highest risk, will be leveraging product, options, futures, collectibles. So today we will be touching on more like the lowest risk tier of the investment. So we are looking for more like capital preservation and still seeking for some capital growth. So today, what I want to recommend, what we will be getting on, is our first step in invest with money market funds. So it might be new for many of the customers, because many of my clients, they seem not to know. Actually, for Philip, we do offer some investment solutions other than stock brokerage. So from here, we do offer some investment solutions, and here is one of them, which is the money market funds. And so what is a money market funds? So money market fund is the short term, which is MMF. Is a type of mutual fund that invests in cash equivalent, and short-term debt securities. Think of MMF as a cash management investment solution intended to offer for portfolio diversification, liquidity, and operational ease. So for this, of course, after all the description, we know it's relative low risk, and it could be offer a portfolio diversification, liquidity, and operational ease. Of course, from here, we are able to see maybe we can set a part of our available funds for this to add in our portfolio diversification, because eventually it leads to liquidity and also operational ease, and also, of course, adding to the diversification. So not too much concentration risk. So here is why money market fund. So of course, the first thing investor we are looking at, which is also the liquidity. Like, are we able to withdraw it, or are we able to do anything about it not being locked up? So here is investors may benefit from the pool liquidity provided by the MMF, which generally offers same or next day access to invested funds. And come to preservation of capital. It, of course, it's also important for beginner investor, or maybe just investor, the preservation of capital. So we are looking at a combination of regional regulations plus other thresholds, and best practices ensure MMF only invest in short-dated, highly rated securities with the aim of minimizing volatility. So that's why it's a low-risk product. And why this particular MMF? Because it also leads to diversification. It's a stringent regulatory and rating agency rules which demand maximum counterparty thresholds within MMF. This ensures diverse exposure across a wide range of short-term debt issuers, as opposed to highly concentrated balances with a sole counterparty. So rest assured, the underlying investment is not only one, but then quite a diverse exposure and across a wide range of short-term debt issuers. So if let's say for some investor, they will tend to look more at the short-term debt. Why? Because short-term debt eventually it has lower volatility and lower effect that will take from the market because it's soon to mature. So that's the thing. If let's say you are holding a long-term debt, of course it can expose to much more risk, right? Because the long term, for the long-term debt, because too much uncertainty, because it's a debt and it's long term. And come to operational efficiency. So there are multiple ways of assessing MMF, making it easy to manage subscription and redemption. Shares remain invested until redeemed, so you do not have to continually trade to maintain the exposure as you would with some traditional banking options such as deposits. So basically, MMF, you can stay invested or you can just do the redemptions. There will be no locking periods. Yeah. So it's quite different from our traditional banking options as deposits because we need to lock in for some time for the rates. And why money market fund? There are yields on it for the active management of MMF, allow them to be dynamic and react to changes in markets. This can lead to the potential for enhanced yield. So of course, money market fund is giving every 7 days, it will come with like return rate. So that is counted the 7 days. Yeah, there will be a rate and a daily return for the MMF funds. So here we are looking at a comparison between money market fund and to a bank deposit. Okay, please allow me to go to, okay, everything is still fine. Let's continue. Okay, so here, which is comparing a bank deposit and a money market fund. So of course, the first point, which will be counterparty diversification. So the bank's deposit is only exposure to a single bank counterparty. If let's say it comes from one bank, of course you are facing the bank's counterparty risk. So only the bank. And for this money market fund, it's investing in multiple counterparties, resulting in diversification and liquidity. Usually for bank deposit, it will potentially a penalties for accessing cash prior to maturity of term deposits. And for money market fund, which will offer same on next day liquidity with no lockup periods. And operational is so for bank deposit, which are multiple bilateral agreement with banks, typically required to achieve laddered and diversified investment, and multiple individual instructions may be required to execute. And for money market fund, which is single transaction, which can be executed in various ways, and instructions needed for subsequent redemption and subscriptions. So basically, someone is attending to it, to the needs, or maybe customer can just DIY themselves. And for bank deposit, it's the yield. The rates will be driven by bank funding needs, which can be volatile. So like what we can see, like earlier of the year, for bank deposit might be a 3+%, but then right now we are seeing a 2+%. So it's really volatile. And for money market fund, it's an active management of diversified money market securities, which allow for nimble positioning in changing market conditions. So an MMF It's not a guaranteed investment, but somehow investment in MMF can fluctuate and investors' capital is at risk. But since due to all the diversification and there is actually no lockup period and a daily return, so these are just the illustration because it's an investment. So investment comes with the risk. So it has to be indicated there. And the fees agreed between client and bank, that is for fixed deposit. So there will be often a cost to break term agreements. So for money market fund, the cost and fees embedded in product, so the yield are received net. Liquidity fees and redemption gains remain mechanisms that may be incorporated in times of uncertainty. So it's basically for all the return you are getting or we are getting is already calculated net of all the management fee and all the charges. We are able still to get the rate. And also, just to reiterate a bit, for bank deposit and also money market fund, they are cash and cash equivalent. Basically, they are of the lowest risk. Okay. So here is the breakdown of the money market securities, like which are our biggest in like the sector we invested in for this underlying investment, and also assets allocation, and also which are the top 10 holdings. We can have a look here. So usually it's more like Asia. For this itself is more like in Asia. So money market securities, which is 41.68%, and also fixed D 29.83, money market fund 5.64, cash accruals 22.85. So what we can see here, basically they are all cash and cash equivalent, so the lowest risk. And let's look at the top 10 holdings. Those are all the MAS bill, which is in a short term debt, you see, matured in September 12th, September 20th, or like matured, and also some in the near future like 25th October, November. So it's all quite short term, so less volatility. Yeah. And basically here is just maybe we can kick up the journey, investment journey, maybe with myself. So we are here from our poems, Phillip Securities or Phillip Capital Management. We are one of the largest retail Singapore dollar money market fund in the market. And of course, the high degree of liquidity that comes to withdraw the investment. And we are able to subscribe through unit trust or access funds management to access to the money market fund. And over 20 years of our fund management, so there is a long track records. So for customer to consider is. So here is basically my contact details. Like here is the call to actions. So I'm your dedicated investment consultant. I'm Guan Qi. My surname is Chen. So for the proper guidance on your, what I can do is also for proper guidance on your UT purchases, and also inform and updated decisions, and take care of your investment needs. Yeah, so that's me. Here comes to the Q&A. Maybe let's open up the dialog window. So first and foremost, of course, thanks Mr. John and Milton and also Miss Samantha for taking the precious time to join me this morning to afternoon. And hope today the learning journey is alright for all of us. At least we gain something. Do you all have any question in mind for me? Hopefully we can get interactive, right? If let's say I'm able to explain or answer on the spot, I will explain and of course explain it on the spot. If let's say I'm not able to, please allow me some time and we will be getting in touch shortly to answer to your question. But then for the money market fund, here in the presentation, there is not much because it belongs to the lowest risk. So many of my clients, they are comfortable with it because they are able to see the benefits, either short term or long term. And feel free if let's say you all have maybe you are shy, maybe can keep this and try to I will go back to the page, go to the basically here. You all can take some time for taking my WhatsApp details. I will leave here for maybe 3 minutes. After 3 minutes, I'm going back to the dialogue to see any questions from you all. So 12:50, I'll be going back to the interactive interface to see any question for me. Another 2 more minutes before I go back to see the questions. Maybe during the waiting time. So do any of you have already have some investment experience with our Philip Money Market Fund or maybe money market fund with other fund houses? Just a question of mine. Like, what's your investment strategies or something on your mind when it comes to investment? Maybe for now we are looking at some lowest risk investment tools. Okay, one last minute before I go back to the Q&A box or our interactive interface. Okay, let's go back to where we can get some interactive. Okay, if let's say there's nothing for me, maybe thanks Mr. John and Milton and Miss Samantha for your time. Hopefully we can meet again soon. Hopefully there's still another learning journey for all of us. to embark with. Thanks for your time, and hopefully you all have some takeaway from today's session. And thanks, Mr. John and Miss Samantha, to stay still with me. How you are feeling today? It's a Monday. So, Mr. John and Miss Samantha, the session has ended. It's really up to you all whether to release. And hopefully, maybe we can get interactive next time. Okay? Is that okay? Okay. Thanks, Miss Samantha. I think you did join me the last one I had on the investment psychology, right? Oh, sure. Miss Samantha, good to see your message. It's really heartwarming on a rainy Monday, you see. But then hopefully today we learn something from the learning journey. And because thanks for taking the precious time to joining me. So the best if let's say we can take away some salient point from today. So can help us when we are doing our own investment or maybe invest with others. Okay, sure, Miss Samantha, that's good to know. I'm happy to see that I'm also learning too. Yes. Okay, Mr. John, how about you? Can we get a bit interactive here since you are still in the presentation? Okay, Mr. John, I'll be staying here another 5 minutes. If let's say you have some question or mind, feel free to leave a message here. So another 4 minutes before I end the presentation. Hi, Mr. John. Hi, Mr. John. You're still there? Are you able to hear me? Another 2 minutes, okay? If I receive any question. Okay, there's still another few seconds. Mr. John, hopefully today you are getting some investment ideas, at least for the money market fund, to kickstart the investment journey. Yeah, hopefully we do have some salient points taken away from today's session. So it's for both of us, we are all learning on this learning journey. That's right. Okay, maybe Mr. John, I'm happy to having you here and maybe looking forward to meet again for the next session. Bye bye.